We were talking about slowdowns for Google a couple of quarters ago. So, you know, and it was just a few years ago when I, as a value investor, got into Facebook because of concerns about growth. So I do think that the call was a bit of a blip. I don't think management was compelling, and they didn't seem to be on their game, and you're absolutely right. People were saying, did you just say? But when you look at Facebook as the maturing asset, you know, as an investor, I say, yep, I think I knew that. What surprised me more than yesterday's sell-off was the run-up after April, or late March, early April. We were selling into that strength. We still own it, and we still own a pretty good chunk, but we sold about a quarter of our holdings because we were concerned about Cambridge Analytica and GDPR and slowdown in usage. But the story really is Instagram, Messenger, and WhatsApp, and how to monetize. And that's part of why the revenues are slowing, obviously, because it's not happening quick enough.
Are you buying? Are you buying more today?
I'd like to see it settle, because when constituencies change, it becomes dead money for a while. And I think the growth investors are going to be really ticked off. I mean, we saw that in after hours, and I think they're going to step to the sidelines. So we probably will add, because we have room to. It's still in our buy ranges from a valuation standpoint, but it needs to recalibrate. Even with slowing growth, it's only trading at a multiple of about in the low 20s, mid 20s. You know, it's not Netflix. So I think this is a bit overdone, and I think management needs to make the case.
Ed, what I just want to understand about the infection that seems to be taking place across all of FANG as a function of this, and whether that's whether the contagion matters, or there should be
subscriber growth too. I would argue less than 2% off of Amazon, which has been up monstrously this year, is not much of a trade. But
also, when Google reported a few days ago, earlier, they upside surprise. It was really nice for investors if you were in Google.
Netflix subscribers did show some weakness.
So I think they each have their own story. Right. I think we like to sort of think of the FANG story as one story, and I think as a growth thing, yes, maybe, but we're getting into nuance now, right? I think for a company that's growing at 42% revenues and then tanking like that is that's the context around that.
But to that point, is this a moment where you're not going to see the FANG stock still be a trade? Like Kramer called FANG so far in advance.
Right, exactly.
They did trade as a group. Is this the moment where they will no longer do that?
I think you need to really start looking at them individually. I think, again, the Google-Facebook sort of difference there, I think, tells us a lot in terms of how Google's growing at 25%, but investors liked it when they saw the results. 42% is not enough for Facebook. I think Facebook still owns 3 of the top 5 apps in the App Store right now. So it's not as if people are running away from the service. I think the nuance of how do they monetize, how do they get more ad inventory into the service, and that's the key thing. They actually Facebook flagged that a year ago. They said, we're running out of ad inventory, not just because we don't want the service.
But also because they've moved into, we should go to Julia, but they've also moved into products like Stories that make it much more difficult for them to monetize the particular product. They've actually built products that are harder to monetize.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.